Good morning, people. Right, it's Monday morning, and I'm showing you this chart because it's got all my lines on for my trades, and so I just wanted you to see what I'd done and the amount of effort I put in every morning to finding a steady trade. Now, yesterday, if you remember rightly, I picked out Euro NZD as my pick of the weekend, if you like. Massive move up. So I expected it to pull down, and that's what I've been trading this morning. In fact, there were loads of trades before I woke up this morning as well. It started to reverse in the Asian session. We can see the yen is weak, so they've been reversing that, and it's made a difference to all these trades. So yen was strong virtually every morning last week. I happened to notice that and traded it a little bit as well. But yeah, so Euro NZD, I'm going to clear the chart down. Another trade I took was GB CAD, but we're not going to talk about that one because it's slightly bent my rules a little bit. But again, big old red candle, longs were the order of the day, and then a third pair, NZDJPY. Load of lines on there, as you can see, and massive great big candle to the downside, weekly candle there, and I drew a load of levels on these charts to see, and then lower time frames to see how to attack that. This one was virtually was highlighted really. I hadn't highlighted it yesterday. I don't think I'd noticed it as a particularly worthwhile trade. The range is so small on this, but yen was here, and the NZD was showing red, blue and red, so it is definitely worth a look. So I'm going to clear the charts down and run through NJ first, I think, and I might do a separate one for Euro New Zealand dollar. In fact, I will. So NJ, clearly a big weekly candle, so we want to be careful of all these resistance support levels acting as resistance, and this one's useful just to make sure we're through it, as it were, to the long side, the low. So there, we might as well put one on our current candle as well, there. And this is exactly what I did prior to the trade, and I actually put a video up, I think, about how I visualize these. In fact, I know I did, because it took 7 weeks to actually do its stuff. And if this was an hourly chart, because you couldn't tell the difference unless you had that there, then you know, the only difference between the trade and the execution is the time. Instead of taking 7 weeks to break through some sort of support level that may have failed and then allow the price to continue up, it takes 7 hours, or in a 15-minute it takes 7 15-minute bars, whatever that is. 75 minutes, no, I haven't got a clue. So let's have a look at the daily chart. Basically this was triggered by this and this currency strength and weekly candle. Draw a few levels on there. Now if you're a range trader, you can clearly see you've got a range going on all of this lot here. Flip zones, highs, supports, becoming resistance, and so on and so forth. So we're at the bottom of the range here. Another great big flip zone there, support, and so on and so forth. So very imprecise. I've just thrown those 2 pink levels on there, as you can see. You could probably do it easier by just putting a level on the most recent weekly high, really, because we know categorically it's got to get through those 2 levels. So wherever the low of that is, that's the way you put your pink range level, and make life easier for yourself, really. And it's more precise, of course. Look, hit to the pip there, very precise flip zones there, and so on and so forth. Very precise levels of wicks. So again, candlestick analysis overrides vague analysis. H4, it's just gone 9 o'clock, by the way, in case anyone's wondering. So 4 good trades before my first coffee of the day, actually. H1 reversed up, high, low, lower, high, lower, low, low, high, high, low, higher, high. So that was good to go. Green on the H4 histo, that's always lovely. Sorry, I meant H4. And look at this as well, massive red swing, and I've mentioned that many times before. I like to see clean swings to trade against, unlike this sort of situation here where you've got a green in the middle of anything. So if you were trying to go long, this is always going to cause a bit of a problem, this supply and demand area, whatever you want to call it, support and resistance area, flip zone. That's better than that. Whoops, mouse playing up that. So H1, we've confed up on H4, we're above the hourly at 8 EMA. The histo is looking good now as well. We've busted up, then we've pulled back, then we've broken and closed above that. That's textbook on H1. So again, M30 is agreeing with us, and at this point M30 had confed up, I think, or was confing up, or had it, no, it hadn't confed down, that's right, it hadn't reversed to the downside, so it didn't need to reverse to the upside on M30. I hope that's clear. So M15 becomes the critical level to reverse to the upside, which was that candle there, if memory serves me correctly. Yes, it does. Obviously I don't rush through things, I make sure my levels are absolutely correct. Stack the trade on the chart now. There it is there, there's the confirmation there, confirmation candle. Big old beastie broke through the 20 level. This is what I'm waiting for. It was a real patience game. There was nothing really that came into correct alignment. I took a GCAD just before 7 AM, but it was risky and I was watching it like a hawk, but I got my 5 or 6 pips out of that. And then as you can see, it hit, I forget where the target was. I hadn't put my levels on there, had I? I had done, but let's go for H1. Obviously all the support levels are put in on H1 and so on and so forth. There was no, actually that's right, there was no support below us. You know, there was no tail here to hit and possibly stop the price. We'd cleanly broken through and had this lovely clean H1 candle to trade against. As I say, that's these bigger candles to trade against are always better and good. So yeah, let's have a look. I put a level on the flip zone because I always like to trade 2 flip zones, and in fact that's where the price went. You can see that, because there's no reason really, in my opinion, for price to continue into the wicks of the candles once you've got such a strong area here. So I hope that makes sense as well. You know, all these little things I forget to mention because you know, I've been studying it for so long. So, and there, as you can see, just cut it short of that flip zone because all I needed was my 5 or 6 pips, and it was actually 7, more than 7 actually, because I'll double check that. Price 85, take profit 92.8, 85.4, 92.8, yeah, 7.4. So yeah, that's it guys. So nice trade. no reason why this shouldn't continue up really, because you know, we've got such a strong move now, and as I've always said, H1 and M30 histo alert validations, as it were, are so powerful. You know, there's an H1 there, and look what happened. There's an H1 there, not above the unbroken, and look what happens. That's the whole best part of the day. So there you go, guys. That's the New Zealand dollar, Japanese yen, found by that and the weekly. Huge candle, and this range you can see we're at the bottom of the range. Don't mention that often because I don't really take it into account, to be honest with you, but if it's there, why not mention it? Alright, that's one trade explained. Thank you for watching. Have a good day.